word of caution for investors. If you see a new discovery that's got a 2 or 3% nickel drill hole, oftentimes, that's a very small portion of it, and it's attached to a bunch of a much lower grade nickel, so that when it comes time to do your resource, this 3 or 4% nickel intersection turns into a 1%. Making money is as much as preserving capital as choosing winners, right?
Investing's easy, it really, isn't it? Hello and welcome to Crux Investor. First of all, thanks so much for watching this video. If you like it, give us a thumbs up. It just helps us understand where we should be spending our time, money, and effort. And of course, do leave your comments below. It helps us understand the sorts of questions you'd like us to ask, how you think we're doing, and of course, what you thought of the interviewee. You can also catch this as a podcast or read it as an article or transcription on cruxinvestor.com. And of course, for our Crux Club members, you get early access to this video. And if you haven't already done so, please click the button in the corner of the screen to subscribe to our YouTube channel. And of course, for more videos like this, click the notification bell. We catch up with Mark Selby for our weekly nickel roundup. He's a nickel market commentator. He's also CEO of Canada Nickel Corp, a TSX-V listed company with assets in Canada. This week, we look at the fact that nickel price has gone up yet again, as has copper price. So basically, base metals are doing quite well at the moment. We discuss reasons why, influence of China, and what could be happening down the line. Is our market reset coming, or is it all good news? We also kind of close the loop. We've discussed with you in the last couple of weeks the EV thematic for nickel and also stainless steel. There's other uses, so we look at a high nickel alloy and also alloy steel, and of course nickel plating, and where that or those markets will be going moving forward. We talk about TSX versus ASX and the retail market's understanding of both and why they operate slightly differently. Also some market news with regards to some company activity. So lots discussed. Take a look at the description below at some of the topics we discuss. Anything interests you in particular, click on the number beside the topic. That's a timestamp, and that'll jump you to that part of the video. Otherwise, enjoy what Mark has to say. Hi Mark, how are you doing, sir?
Good, Matthew. Good to see you again.
That's a nice setting in the background. You're up at the cottage, are you?
I am at the cottage, yep. That's one of the benefits of living in a country where you have 3 million square miles and only 35 million people is there's actual land that's not too far away from the city where you can be on a lake and be able to get out. And particularly in COVID times, it's pretty spaced out here, so it is a nice place to have to quarantine from time to time.
Very nice. So you're on a lake rather than up a mountain then, is that right?
Yes. Yeah, no, once you get a little bit north of Toronto and onto, geologically, which is the Canadian Shield, we literally have tens of thousands of lakes. I think we have something like 30% of the world's fresh water in the country. So, yeah.
Right.
So very few people, lots of little lakes means you get a place on a lake.
Crikey.
So, which is rare around the world.
I'll be freshwater. I'll be applying for my Canadian passport at this rate. Well, look, we're here for a weekly catch up on the world of nickel, which, from what we're seeing, is starting to hot up somewhat. We've talked, in the past few weeks about a little bit of M&A. We're going to do a little bit of market update in a second, but I'm going to have to call you out 2 weeks in a row, buddy. Price. Nickel.
I know, fabulously wrong twice. This, it might be all over after today. So, after, again, fundamentally, I didn't see anything that would suggest the market was going to move higher, and thought we were going to trade sideways for most of the balance of this year until, the EVs really started to rebound through. But yet again, the world of momentum trading has pushed. Nickel was up another 5 to 10 cents this morning. I haven't quite seen where it is. So we're doing 605, 610 a pound, or up to 13,000, 400, 13,500 range. So well above sort of that key $6 a pound threshold. It wasn't the Chinese exchange this week. It was, again, sort of signs that you've got macro money pouring into the space. The price of copper's gone up 15 cents a pound since we talked, 300 plus a ton since we talked last week, and is closing in on the $3 a pound level. So, it's been trading right now around $6,500 a ton. This is up above where it was pre-COVID. We were 5% higher than we were pre-COVID. and it's been nearly 2 years since copper's been back to a $3 a pound level. So again, if you want some confirmation that there's, we've got a strong Chinese rebound coming, we've got macro money coming into the sector, copper has the added sort of overlay that COVID's really having an impact on production in Chile and Peru. So there you've got some additional supply concerns mixed in with it, which is why it's trading up above where it was pre-COVID. And again, as copper is one of the big LME metals, it helps put some upward pressure on all the LME metals, which I think benefited nickel during the past week. So we'll see. Hopefully next week, it's good to be wrong in this direction, but again, I just don't see on a fundamental basis that we're going to see these things sustained. Unfortunately sustained for the next, until we get closer to year end.
It's interesting you say that, because we've been talking to a few companies, gold companies, who are now, washing themselves with cash because of the gold price, but they're looking at copper as a hedge to their gold investments, which I thought was an interesting take on things that could influence things like the copper price, which in turn puts upward momentum on things like nickel and all the other kind of base metals. What were we worried about? This COVID thing was meant to knock the market for six, wasn't it?
Yeah, no, it has, but again, you're getting the sort of the reflation trade happening. So we're seeing it first here in China in terms of them pouring money into the sector, which is in turn flowing into commodities as again, China is doing fixed asset investment to help sort of boost their economy. I think we've discussed before. I think what we'll see in the West, and again, Korea kind of joined the party this week with a sort of a new Korean New Deal. Again, which is along the lines of companies want countries want to get their people working again, their economies growing, and in the process help quote reshape their economy to more of what they think they should look at in the future. So and again, there was some other sort of electric vehicle benefits there that, again, not today, but, over the next few years should help benefit, the metal sector, particularly for all those metals that are involved in that whole infrastructure chain.
Yeah. And then again, it's just going over a conversation we did have previously, which was about, it's all well and good these people are producing stuff, but the West has got to buy it. And if we don't buy it, then producing it is not going to matter for toffee, really. They're going to stop producing it because we've stopped buying it, and that cycle slows. It's a downward spiral from there, isn't it? So what are you saying? You said earlier it's going to have a little reset. It's popping up now, but it's going to have a little reset. When and what's that look like? Yeah,
no, I think again, to prevent that sort of this recovery stalling, you're just going to see governments continuing to throw stimulus at it to err on the side of overshooting rather than undershooting. Because again, once you lose your momentum and you start to stall again, which we saw multiple times in Japan over the last 30 years, again, I think the governments will err on the side of overstimulating the economy versus understimulating. Again, that's why gold is close to all-time highs, because to do that, the governments are going to be printing lots of money, which should be good for gold. Gold's one metal I will never ever forecast. But coming back in terms of sort of that natural hedge, in my past life at RNC, part of the reason we like Beta Hunt was because it was a nickel and a gold mine. So you had there's one operation where, again, they're not completely anti-cyclical, but you do get some natural hedging between both of those, between those commodities, which again just should help your cash flow be a little less volatile than it otherwise would be, which investors tend to like based on what they tell me. So
yeah, interesting. Well, look, we're here this is an educational series, okay? We're trying to learn about the nickel market. We're trying to understand what it's used for, what the future could look like. So you're helping us with that. So in the past couple of weeks, we've looked at the EV thematic and why nickel's important to that. We've also last week realized that actually stainless steel is a much bigger component for nickel. But there's still more. There's a few more uses, and it might be worth covering those off. So why don't you sort of skip us through some of the other uses perhaps most people aren't aware of?
So, I think to date, again, EV is the future and the stainless is the as is, and 2/3 of nickel consumption now is stainless steel. 5% or so is the EV market, and that's going to grow very, very substantially over the next 15 years. But there's about 30% of the current uses, which have a sort of fairly diverse set of uses, and they're each roughly sort of 10-ish% each. So the first one, and this has been a very sort of strong source of growth long term, is with sort of category called high nickel alloys, and so. In stainless steel, you use about 8%. The main nickel stainless steel uses about 8% nickel. In high nickel alloys, you're looking to use materials where you've got 15, 20, 25, 30, 50, 60, 70% nickel in them. And again, you're alloying them with things like cobalt and molybdenum and chromium and iron. And what you're trying to achieve is, a set of properties in terms of strength, in terms of being able to have strength at very high temperatures, being able to stand a lot of pressure, be super corrosion resistant, and in some cases, have some certain magnetic properties because, those there. So, that's what, high nickel alloys are. So anytime you're sitting in a jet airplane and you look out the window, those jet engines next to you, have a couple tons of nickel in them because those nickel alloys are the most durable alloys for use in those type of applications. Obviously, that's a good source of, historically, it's been a great source of demand because, airlines aren't going to change the alloys they use to save $2. It's a pretty extensive permitting process to permit an engine and permit the materials that can be used in an engine. So that's always been a very sort of non-price sensitive source of demand for nickel. Obviously, with COVID and the collapse in travel, that's going to, that sector has been really hit hard over the last 4 or 5 months. Another area where those go into is in oil and gas. So again, both of those areas. So high nickel alloys for the last 10 years has been a sort of pretty strong, robust source of growth and is actually going through a lot of pain. I know one of your talkers talked about the cobalt market and talked about sort of the world of paying cobalt in. And because again, cobalt is commonly alloyed with nickel in these types of applications. So except it's a much bigger part of the cobalt market than it is the nickel market. So, that's why cobalt's getting disproportionately hit there. So that's one sector, high nickel alloys. The next one is alloy steel. And so, again, this is areas where you're not necessarily creating stainless steel per se, but you're looking to throw a few percentage points or, again, up to 10 or 20% of nickel to get some specific properties. Again, just make it a little stronger, a little more, it won't, there's one common alloy that doesn't change size based on temperature very much. And again, places where you want things to be a little magnetic. So, they mix a little nickel in. So again, that group of applications is roughly 10% of the market. And the last sector, which has kind of been shrinking over time, is the plating market. That used to be a super big application back in the 60s and 70s, and has sort of moved around the world in different locations as plating is not necessarily the most environmentally sensitive process. So it's unfortunately migrated to places that have the lowest regulation from time to time. But again, if you think of big cars from the 1960s with great big chrome plated bumpers, even though they're called chrome plated, that plating is actually a series of layers of chrome and nickel, which make it resistant to rust. And so things like shopping carts and all kinds of things, wherever you saw chrome plating, there is a little bit of nickel in that application. Now, with the big spike in nickel prices we saw back in the mid 2000s, people really don't care whether their shopping cart is chrome plated. And so, those applications tended to get shifted over to other non-nickel uses at that time. So now most shopping carts are basically coated with some sort of plastic or other sort of non-metal coating to be able to sort of make them corrosion resistant enough for the underlying iron that they're made of. And so again, this is an application that's kind of 5 or 10% of the market. So they're they're not the big story, but they continue to have from time to time influences in terms of where metal demand's going. So I thought it'd be good just to sort of round out so you now have the entire 100% of the demand pie.
That's fantastic. But people are looking to, obviously, stainless steel, as you explained last week, it's huge. That's not going to change anytime soon. And the market we've just talked about today, being high nickel alloy and alloy steel and plating, that's not a growing sector as such. The growth demand is all coming from EV.
Yeah, that's correct. And again, right now, the high nickel alloy sector, because of its dependence on aircraft and oil and gas, has been sort of a drag on overall demand growth over the last 6 to 12 months.
Right. Okay. That's interesting. I mean, that does kind of help us understand, where nickel is being used. And there's no kind of new applications for nickel. Nickel's just looking 100% at EV and saying that's where we want to play.
Yeah, for sure. That's the current, big source of new demand. One little one-off piece. There were some stories this week where people had patented a nickel-coated air filter, or not nickel-coated, sorry, a nickel alloy air filter, where you basically sort of put it into air-conditioned air circulation units in commercial buildings. And so as the air gets pulled through, they basically zap the COVID viruses that are in the air. And the reason they're using nickel is you can heat up this filter so that it gets hot enough that if the COVID touches it, it kills it. And a lot of metals, if you heat them up, it causes them to corrode more quickly. In this case, the nickel prevents them from corroding too quickly. So we'll see whether that becomes an application. But it was sort of an interesting, just to highlight sort of nickel has a lot of properties that make it very, very widely used in a bunch of different applications.
Okay, I'm not going to follow up on that one, because that's. Everyone is trying to come up with a way that they can get on the COVID bandwagon for funding. So I'm not. The headline won't be nickel cures COVID. But it is kind of amazing, because I think we also had a guy talking about copper this week, and he was talking about the long-held health benefits of copper as a potential market, which is, I think, is well understood. People drinking from copper cups and copper bracelets and so forth, but it's probably not going to drive the market, I think, and I suspect neither will these air filters. Yeah,
I know it does. I mean, copper has these really good antimicrobial properties. Silver is the only thing that's better than it, but for whatever reason, to date, it hasn't caught on. So I don't know whether COVID will cause more people to find ways to create copper coatings to be able to make them more antimicrobial, but I think it's a big TBD at this point.
Okay, Mark, but I saw something this week with regards to Centaurus in Brazil. I mean, what's happening there? Because we talked in the past. There's a lot more M&A activity. There's a lot more news. Nickel's getting noticed again. So what can you tell us about Centaurus?
Yeah, what was great there is we've talked about sulfide and laterite before, and sort of the different sources of supply. And again, the key thing why I'm doing Canada Nickel is there's really very few new sulfide discoveries in the market. So, and again, there's very few nickel stories and ways for people to invest. So, I'm glad to see more and more stories come to market. They published, I think the week before last, they published their first resource since they picked it up, which was just under 50 million tons of nickel at just over 1%. And again, it's a nickel sulfide project. The key thing there is, just over 1%, and with a portion of it that's open pitable is pretty attractive. So, I was very glad to see that come to market. They picked it up from Vale. They traded another asset for Vale. Vale initially discovered it a while back, and it wasn't quite big enough for Vale to move the needle for Vale. But again, there's a lot of room between zero and what moves the needle for a $40 billion company. So they've been drilling it off. They've got some pretty nice intersections, and stringing it together to resource. Because the one thing that's what's tricky with sulfide is, and again, it sort of as a word of caution for investors, if you see a new discovery that's got a 2 or 3% nickel drill hole, that's good and that's exciting. Definitely pick it up if it's trading very cheaply. But the challenge with the way a lot of nickel sulfide deposits are structured is you may get a small slice of it that's where the material is pooled, that you get a higher grade slice through it, but oftentimes that's a very small portion of it, and it's attached to a bunch of a much lower grade nickel, so that when it comes time to do your resource, this 3 or 4% nickel intersection turns into a 1% nickel grade that's not very exciting. This is not the case with Centaurus. They're coming along with some very, very good drill holes in the set. It's open pitable. So we'll see how that one evolves. But again, what we need new discoveries. We need more nickel. The auto industry is not going to rely solely on Indonesia to deliver all the nickel it needs. And the biggest problem I hear from a lot of investors is there's just not enough ways to really trade nickel as there is in copper, gold, and silver, where you literally have dozens, if not hundreds, of companies to buy. It's a pretty small group of companies that are publicly traded today.
Okay, it's interesting. I mean, it's interesting that there's so much attention to this sort of news happening now. Actually, we were meant to be doing this week the Q&A with people, but I think it's a slight problem at my end. Someone didn't quite get round to doing everything they should have, so I apologise. It's our fault that's happened. Okay. But we have got about half the questions we wanted, but we want to do a proper session with you next week. So that's coming up next week. But one question which does keep coming up, and I think it's maybe just worth spending a few minutes on now, given we're talking about the kind of M&A type of activity that's going on, where people should be looking, the sort of deals that are happening, and we do need more nickel in the market, is ASX versus TSX. Because you mentioned in the past that ASX have, they like nickel deals. They understand nickel deals. What's the difference between an ASX investment and a TSX investment in nickel?
Sure. No, that's a good question. So, what the key difference is the bulk of the TSX nickel stock. So back in 2005-07, the last nickel cycle, you had Inco, Falconbridge, Lionor, Caneco, and several other companies all got acquired. FNX was another company that got acquired during that time frame. So you had a whole set of small, medium, and large size companies that all got acquired. So all of a sudden, in terms of the investable universe for nickel, it collapsed down to literally a handful of companies by 2008-09. So, and it happened at a time when nickel fell out of favor with most investors. So it was like, well, I don't like nickel that much. There's very few ways to play it on the TSX. So literally, the biggest challenge I had with RNC and Dumont through the 2010s was trying to, if I could sell an investor on what the long-term nickel story looked like, was, what, I'd love to invest in you guys, but there was us, there was Sherritt, and there were a couple of other smaller companies at various stages of exploration and development. The total market cap, the entire market cap that was nickel was a pretty small number. They said, I just can't, as a fund manager managing $300, $500, $1 billion, I can't justify the time to spend it on nickel to get, to then make a decision about buying a nickel company. On the ASX, there were some acquisitions, but by and large, you still had, Western Mining was the big one that, BHP took out. But you had a very well-developed set of companies. Western Areas has been the long-term, producer in that market. You had Panoramic, Poseidon. You had a bunch of exploration stage companies that had, different deposits. In the mid 2010s, I've talked about Sirius Resources before and their Nova Bollinger discovery that, it was literally the last hole of the last campaign. It was trading at, 0.2 cents, and then it was 100 bagger, and again, people tend to remember those. So you've always had a very investable set of companies on the ASX, which has now been joined by Nickel Mines, which owns a chunk of one of Tsingshan's plants in Indonesia. So again, for Australian investors, they've continued to stay invested in nickel all through that time frame because it's sort of been a large enough investable universe. So, again, why I'm excited to see the Centauruses of the world start to emerge with looks like a pretty interesting deposit is just we need to continue to expand that investable universe to give investors the full set of options to so they're like, okay, I'm going to learn about nickel and I'm going to commit capital to this space because I've got a bunch of different ways I can play it as the story evolves.
But the difficult thing for the TSX is you're not seeing management groups going out and being able to find good nickel projects. There's still literally a few handfuls of nickel companies, and most of them quite early stage. I mean, I know we've talked about your company, Canada Nickel Corporation, where you you've got the world's 11th largest ore body. It's you kind of got lucky in a way, and you're hitting the cycle. Right? I get that, but there's not a lot of people going to be able to do that just because nickel's sort of on the up now. Going out and finding something is really, really hard.
Yeah. So the key, I think, what you're starting to see in Australia already is you're starting to see a bunch of emerging exploration stories. So again, when a sector starts to come in to view, two things tend to happen. One, you see the money first go to cash flow producers, and typically the ones that have the highest torque are the ones that go first. Then it sort of spreads out to sort of the average producers. And then, sort of once people start to believe, okay, there's a longer term story in place, you'll start to see dollars flow down into the exploration side. So again, like we've seen in the gold market, it took a while, it was all the major gold stories that moved for the first while, and all the gold explorers were like, oh, everyone's excited about gold. When am I going to be able to raise $5 million to do some exploration? And over the last 2 months, we've all of a sudden seen a huge amount of cash starting to get invested in the, in earlier stage exploration. That's already started to happen in Australia. So you're starting to see a bunch of earlier stage exploration stories evolve. And again, some of them will work, some of them, most of them won't. That's the joy of early stage exploration. But, we're at least starting to sow the seeds of having companies that will start to move up the chain. With Canada Nickel, because of the nature of the deposit and our experience, we're able to advance it very quickly there. That's not going to be the case with everybody. But again, those are the opportunities. If you get in early with the company at a relatively low valuation, it could go to zero, but it also, those are the ones that give you the chance of having those, 10, 20, 50 baggers that we all dream about in our portfolio.
And I hear about every day, 50 baggers all the way. But tell me, do you think it feels, we're interviewing a lot of people. We're interviewing a lot of CEOs, a lot of market commentators. We're actually interviewing a lot of investors as well, actually. We interview investors every week. People are getting excited about mining again, partly because the way that the rest of the world seems to be imploding with regards to quantitative easing, etc. And people are very, very nervous going forward. So precious metals are doing quite well. But so it seems are a lot of mining commodities at the moment. What are you seeing in terms of conversations that you're having? Because, are you having conversations with more generalists coming into the space now?
Not yet, but that is coming. These moves now, and again, this momentum trading, it is those generalists. We're starting to deploy capital. They say, okay, the central banks are panicked about deflation, given what's gone on with COVID. And so, all of these central banks and all these governments are going to throw huge amounts of money to try and make sure they can reflate their economy and avoid any kind of, deflationary pressure. The beneficiary of those are hard assets and things like metals and mining. So, so there's that one thematic that's, going to cause more money to slide that way. The other big thematic that, will benefit from there is, again, just relative valuation. I remember I joined Inco in 2001 as head of market research, and we had Morgan Stanley's chief strategist come in and sort of talk about, long-term cycles and everything like that. And, what was fascinating was, literally, again, this is a pretty common theme in investing generally. The hottest sector this decade is, not surprisingly, turns out to be the weakest sector, the decade following. But again, it's one of those sort of facts of the market that people just seem to forget every cycle. It's like, oh, I love tech. It's up 1,000%. I think it's going to go up another 1,000%. And the reality is, over the last decade, mining metals has not been a very strong performer, relative to the tech sector. So, if you're a generalist, do I want to buy, Apple at, 52-week highs up 100% over the last 12 months, or do I want to buy up, this beaten up stock that's trading at two times cash flow? That if commodity prices go anywhere close to what I think I'm going to do, it's going to, the value is going to go up 5 or 10x. And then I think the big guys, have convinced the larger investors, the BHP Rios, that, mining's been a horrible destroyer of capital over time, which has made it difficult to always have those long-term investors stay with you across the cycle. But, again, they've been very disciplined to date in terms of starting to return money back to shareholders, which is, why we're actually in business. So again, I'm hopeful that, as we, this reflation trade happens, and, the rest of the markets, stays relatively highly valued relative to the mining metal sector, that we'll start to see, some more money come our way. And again, given the relative scale of these, that's the other thing we really want to point out is, these are massive amounts of money that are deployed in other sectors. And if you even get a small amount of this generalist money start to be reallocated to metals and mining, it'll just seem like a deluge of capital coming into the sector.
That's exactly the point, because we've been approached by a couple of handfuls of generalist funds looking at, and they're looking at the fundamentals of certain commodities. I won't get into it, but they're basically looking at roll-ups, because there's a lot of companies who are starved of the oxygen of cash, but the fundamentals of the business, the commodity, the macro story going forward are there, and maybe it's even the management team aren't up to scratch. And just talking to us about some of the opportunities in the different commodities, and it's not just the EV thematic here. There's some sort of very, very unloved sectors which are just throwing off a lot of cash, but I think there's opportunities in too. But it's always interesting to me, and I've been saying this over the last 2-3 weeks, that when you start seeing these generalists who are heavy on cash, light on knowledge, something's up. And I think that's what I'm hearing.
I would completely agree. And again, that's where, why do you wake up and you go, oh, geez, everything has just gone up this much in the last, 2 weeks. And again, copper prices were up 50 cents again from where we talked, 2 months ago. And that's a huge move if you look on the charts, and that's happened, on the back of some good Chinese news, and that COVID's, wasn't as bad in some places, outside the United States, as some people were expecting. So it's, and that's what happens. It's just a little bit of generalist money, and a small percentage of reallocation, and, sectors can really, really take off. So again, pick up quality names at different stages, because they'll all trade differently as that money comes in.
I think that's right. And I said
it could be a fun couple of years.
Yeah, I think it could be a fun couple of years. But I would say that, like, retail investors now, as well as doing that, I think listen out for trends. Listen out for the commodities which people are starting to talk about more and more on not just the usual supply demand the next 2-3 years. Usually see that if I see another one of those charts telling me that, spending the first 5 pages of presentation telling me the macro thematic, it's what people are talking about is some big clues, because again, if generalists start listening to this, if retail start listening to this, there's this kind of momentum story. We're big fundamentalists, and like you, we understand that certain commodities operate within upper and lower thresholds and all the rest of it, so that you can get really, really cute with it. But I think trends is a big part of this, just listening to what's happening, what people are talking about. So not to be ignored. Yeah.
If you end up with a pile of exploration company, if you buy 10 exploration companies, again, they could 1 or 2 probably may go, but there's a chance you get 0 for 10. Right. And, the commodity prices may have unfolded exactly how you expected, and you end up getting, blowing up all your capital. Again, it's, buying Rio Tinto or BHP or Glencore is not going to be nearly as sexy, and you can't tell your friends that you got a 10-bagger on Glencore. But, if you identify to get the trend right, those companies will benefit, not with the same sort of, leverage. But if you can sprinkle it around, it's just, you'll be, making money as much as preserving capital as choosing winners, right? So, don't that just would encourage people to try and do that as much as they can.
Investing's easy, it really, isn't it?
Not quite.
No, I know.
Try not to do stupid things. Again, cycle in, cycle out. So
Okay. Hey, well, Mark, thanks very much for this week's run through. Nickel, it's kind of helped kind of complete that picture. There's always news in this space, always things moving. So look forward to catching up with you next week and see what's happening.
No, that sounds great. We're looking forward to it and looking forward to the questions. So yeah, encourage everybody to throw whatever they want to know at me.